Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Matt McLennan. He is a commercial real estate advisor in Washington State, specializing in industrial leasing and sales. Since joining his brokerage, Mathews, Matt has facilitated over 3 million square feet of sale and lease transactions valued at over $300 million. Before starting his brokerage career, Matt spent 4 years in various sales and upper management roles in the wine and spirits industry. So thank you so much for coming on the show today.
Thanks for having me. Glad to be here.
Yeah. So before I guess I was reading that you've been a broker for several years right now, 8 years or something like that. Is that correct?
Yeah, that's exactly right.
So before becoming a commercial real estate broker, can you tell us what you were doing before kind of getting the itch and the bug to get into real estate?
I left college with classic, like I went to like a recruiting fair at college and I got a job working for a wine and spirits distributor, which was a really cool company, and it was sales. So I got into sales, right, which was I think a good foundation for what I'm doing now. And I rode that wave for several years. It was a lot of fun. And then I had friends that were in commercial real estate that I was spending time with, and they were talking about commercial real estate. And admittedly, I had very little, if any, exposure to commercial real estate. And I became very intrigued with what they were talking about. And they were on the brokerage side. So that was kind of what I got firsthand exposure to. And once I kind of figured out what brokerage was, I thought, I'm pretty good at selling wine and, $10, $20 bottles of wine, but I could sell $1 million buildings like that. That sounds a lot cooler. And, so really, I got introduced to our management at Mathews through some of those friends I was talking about. And next thing you know, I was quitting that industry and starting in commercial brokerage, and like most, just drinking from the fire hose day one and not making any money and hitting the pavement hard. And fast forward 8 years later, and here we are.
Nice. Can you give us an overview kind of like the asset classes you focus on at Mathews?
I am an industrial guy through and through. So at Mathews, we have three components of our company. We do brokerage services, property management, and valuation and advisory services like appraisal. And then on the brokerage side of things, and we cover all property types: multifamily, office, industrial, hospitality, land, really anything that's not residential we will do. But for me personally, all I work on are industrial properties. So think big box Amazon warehouses, port driven outside storage type properties, manufacturing facilities, really anything that's a metal or a concrete box that things are made or stored in. And that's what I do. And then within that, on the industrial side, it's leasing, it's sales, it's development, investment. But I do stick exclusively to the industrial side of things.
So over the years, how have you seen the industrial real estate asset class kind of change?
It has evolved a lot, actually. You go back, industrial, like most of the asset classes, isn't new, but it's never really been an investment, a very attractive investment class. It was always, a down and dirty type product type. It was a place where people made and did things, but there wasn't really an investment side to it all that much. And really, a lot of that drives from there was no rental growth in industrial, at least here in the Seattle area. The rental growth for, call it, the 80s, 90s, and even the early 2000s, very marginal. And then all of a sudden, e-commerce happened and Amazon happened, and everybody, including you and I, are having things show up on our doorsteps every day. You need to store that stuff somewhere. And all of a sudden, these industrial warehouse buildings are housing Amazon and Amazon service providers. It's not exclusive to Amazon, of course. There's a lot of others out there, but warehouse started to show up in the forefront, right? Yeah. And consequently, demand increased, which drove rents up as supply decreased. And so industrial all of a sudden saw this huge, just massive wave of improvement over the past, if we use the past 10 years, for example, it's probably the best time frame to use. Yeah. And of course, when an asset class is performing, who gets involved? Private equity, Wall Street money, institutions came in, especially to the Seattle market, and started investing, which also drove values and interest and demand up. And so we've been riding this wave for the better part of 10 years. And this is national. It's not unique to Seattle, but Seattle, we're a port driven market. We have 2 ports here. And so naturally we have just a large industrial base and a large industrial demand. So we've benefited dramatically from a lot of that demand. So it's been great. It's been fun to watch, been cool to be a part of.
Yeah, that's really cool. I think you see the institutional money kind of go into these sectors when there's when you start getting these like grade A credit tenants that are using it on the other side of it. So, if you had like an individual like pad site and you're putting a Walgreens there, you're going to have, those cap rates are like driven down to nothing, right? Because it's almost like getting a treasury. And the same thing if you're leasing out to Amazon. I mean, it's pretty solid tenant. You know what I mean?
Yes.
So
Oh
it's
yeah.
it's going to be. I that's one thing I've kind of like realized with a lot of these different asset classes is how safe and secure the money is where you're getting it. You're not going to find institutional money going into low grade apartments, for example, right? They're going to get into those credit tenants, the B plus, A type class properties, and once they go below that, they're sold. You know what I mean? They go down until the value syndicator type pings. But with that happening institutional, I mean, are there still deals out there for smaller investors and syndicators, or is this primarily overrun with institutional money? Because I mean, there's going to be industrial properties, I imagine, of all different sizes that are going to house some of those Amazons, and then also ones that are going to be down for your smaller tenants.
Yeah, the answer to your question is as much as our market has become institutionalized, there are still plenty of mom and pop owners, private investors, private equity out there. Yeah, there's still deals to be had. I mean, a good rule of thumb is usually to look at dollar size, right? And so as soon as transactions in our market, a lot of them are getting over, call it $5 billion. That's usually where the institutional money will start coming in. If you're playing in the field under $5 million, a lot of times those deals are just too small for a lot of these institutions. So they don't bother, right? It could meet the same returns and thresholds and criteria that they're looking for, but it's just on such a small scale that it just doesn't capture their interest. So for smaller investors, that's fantastic, right? You're getting to arguably get comparable deals maybe as some as the institutions, but you don't have to compete with them, and they are very hard to compete with. They take very low returns. They have endless capital. They're cash buyers. It's a different ballgame.
Yeah, for sure. But obviously, if they have so much money to deploy, they can't spend it on all these smaller assets. It would be a asset management nightmare.
Yeah, just time value, money, and resources. They got to allocate accordingly. So makes sense.
So one portion of industrial real estate sector that you focus on is industrial outside storage, or IOS. I mean, this is something that we haven't spoken about on the show, and it's very interesting to me. Can you explain what it is?
Yeah, iOS is super interesting. So the funny thing about iOS is it's been around forever. It's not like it's a new type of real estate. It just has been branded iOS in recent years. But just like it sounds, industrial outside storage, it's anything that would be kind of categorized as an industrial use, but not under the roof of a building, right? So think the parking of semi trucks, think lumber laydown yards, think your fencing company that builds chain link fence in your area and they store all their chain link fence outside, think your local HVAC or plumbing contractor who has a fleet of vans that come out and do the work on your house during the day, and then they have to go back and park those vans back at the large oversized parking lot at night before everybody comes back the next day and goes out on their next jobs, right? So it's a function of a good or a service that is essentially provided to the community, but doesn't need to be stored inside of a building. And for us in Seattle, being again a port market, what comes in from the port containers go on truck chassis, or they get stored outside because they're metal containers. They don't need to go in a building. And so we have a lot of iOS and a lot of legacy iOS. And then what happened is, as warehouse and where iOS is a brand and really now as an institutional investment product, because institutions are buying iOS now, whereas historically they hadn't really been doing that. The reason that happened was as we saw warehouse demand and go up, supply go down, and rents go up, warehouse space under a roof became so expensive that so many of these operators, if they had a product or something that could be stored outside instead of under a roof, well, their rent for the outside space was probably 25, 35, pick your number, right? Half the rental amount that they would be paying for building and space under a roof. So they're going, yeah, why wouldn't I? Let's just store it outside. It's way cheaper. Let's do that. So then that drove demand for iOS up. Supply started to come down. Rents started to go up. You know the story. But yeah, no, it's been super interesting. And for me, I think I was fortunate in that I had several clients that were operators in the area that for their business were using iOS already. And so I was already out kind of on the forefront looking for iOS space, working on a lot of these types of transactions before it got branded, before institutional money and funds started getting raised to buy it. So I was already well positioned. I knew the iOS market a lot better than I would argue most. So for me, it was an easy transition to spend time on it. I still do a great. I'd probably argue that the majority of my transactions are still warehouse box type deals, but I do a lot of iOS deals too. So it's fun.
Yeah, the iOS. The first time I really heard talking about it was I have a contractor friend of mine, and he does a lot of like site prep for before builders come in to build houses or whatever. And he would say, "Well, we go into a new market. He's like, I got to find like a yard there to put the heavy machinery, because it's going to be an hour and a half driving back and forth. I put it there." And I never really thought of that. And I think most people don't think of that. So can you kind of give us an idea of, where are these iOS yards typically located? And I mean, what are the size normally of them? Because obviously if you're semi trailers versus like my buddy that maybe needs like an acre, you know what I mean? Or a half acre to put his machinery, you're going to have all different sizes and how close they are to where they're going to be using this machinery or this equipment.
The answer to your question is all shapes and sizes, frankly, and really in all locations too. I mean, again, I keep going back to this port market concept, but for us, so much of the activity in the population center, frankly, we have the Port of Seattle and the Port of Tacoma. Well, Seattle is the largest city in the state of Washington. Tacoma is the second largest city in the state of Washington. And so you go between the two, and they stretch each other kind of north to south. So a lot of the iOS activity follows that kind of north-south curve along the highway. Size-wise, though, I mean, I see half-acre lots. I see 5, 10, 20-acre lots. We're a pretty land-constrained market, so we don't have a lot of large iOS lots, and we don't have like land out there to create new iOS lots. We're using what we already have, right? But the sweet spot for a lot of tenants is really like anywhere from 1 to 5 acres. If you need more than 5 acres, you're usually running like it's a pretty large operation. It's usually like a national grade, credit tenant, right? That has these kind of operations all over the country. Think again, Amazon, Walmart, large logistics companies, Penske Trucking, JB Hunt, who does intermodal services, big drayage container companies, things like that. But there's really no key answer to your question. It's all over the board.
And I mean, how do these get valued? Because if someone wants to sell one, I mean, I imagine they're coming to you for some sort of price opinion letter kind of thing. And like, how do you do that? I mean, how are you kind of valuing these customarily?
A lot of it is still subjective and experience based. I mean, comps matter, right? I mean, I think the comps will always be relevant for real estate, but the uniqueness, if you're talking like using multifamily, for example, like multifamily, it's pretty straightforward to say, is this class A, class B, class C product? What's deferred on it? How do we, they're comparable, right? iOS sites, one iOS site very rarely is comparable to another iOS site. They may or may not have buildings. This one might be paved. This one might be graveled. There's high quality fencing on this one. There's no fencing on that one, right? This one has warehouse and office space. This one doesn't have a building at all. I mean, it's just, it's very, very subjective. And consequently, most people don't know how to price it. I see deals all the time where some of my investor clients are getting great deals because they're undervalued, because people don't quite realize and understand how to price them accordingly. For me, I just have to lean a lot on my experience, knowing what the tenants want, what a lot of these tenant businesses can afford to pay for an iOS site and reasonably make the business model work. Because that's at the end of the day, especially if you're investing, right? It's who are my tenants? How much can they afford to pay and actually make rent, right? Versus skipping out. So I mean, as far as values, it's still the Wild West. I mean, we see some cap rate deals out there, but they're very rare. A lot of times these iOS sites are selling either vacant or they're being sold by an owner user who's planning to, maybe vacate or do a short-term lease after they close the sale. But it's still very subjective.
That's great for investors in the know that kind of understand what the true
Yes.
value is, for sure.
Yeah, it's a huge opportunity.
So for an investor like that, they buy a piece of land. How do we do a value add? I mean, how would we buy for a certain price? I mean, what is our value add strategy that investors would price, I guess, into their business plan for a type of yard like this?
I would say compared to like a typical value add where you think like aesthetic, for iOS, it's very much function driven, right? So is my site, it's a lot of the examples I just threw out there. Is it graveled or is it paved? Will tenants pay more if I pave this yard? Well, then let's go ahead and get out there with concrete or asphalt or whatever it is and let's pave it. Does it have a building on it? If the answer is no, how much would it cost me to build a little shop office combo building? And if I have that, how much more can I rent the property for, right? And so I think it's making structural improvements to a lot of these properties to that's where you're adding your value. So you're buying it, you're going in, it maybe it's been deferred, it has an owner that didn't want to spend a lot of money on certain improvements or whatever it may be. You're going in there hoping you're getting a low basis to start, you're planning on spending money day one, you're making these improvements, then you go lease it to tenants at a premium rent versus what you would have gotten for it going in.
Nice. Yeah, that makes sense. Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. Now, talking about tenants, this is another thing too, because you're saying, I guess, average 1 to 5 acres, which is quite the spread for, I mean, those are two, it's a pretty big spread between of different size piece of land. Do you have tenants that ever go in that have the intention, or maybe if you're selling a property that already is set up like this, maybe as multiple tenants or subdividing the yard, or are you looking for the best play is one tenant that kind of does all types of things on it, uses part of it, rents out part of it?
It's a really good question. I've seen it both ways. And frankly, I've seen it there's pros and cons to both, right? I mean, if you only have a single tenant, it's one point of contact, it's easy, one check to collect. And that can work out really well, right? On the other hand, if your tenant goes away, there goes your entire income stream. So the beauty of a multi-tenant situation is kind of spreading out your risk a little bit. You got to make sure that they can all play nicely with each other in the yard, because that's really what they're doing is
Yeah.
they're all hanging out in the yard together. But yeah, a lot of these larger properties, we will divide them up. And fortunately for iOS, depending on how the property lays out, sometimes really all you have to do is throw up a chain link fence between, in the middle of the property. And now it's one 5-acre property is 2.5-acre properties. So it can actually be quite simple in its most bare form. So it's really just kind of personal investor preference. Or again, like a lot of times we'll go out there and we'll market a 5-acre site, and all that shows up is a 2 and a 3-acre user. We weren't planning to divide the site, but those are the tenants who have shown up. So we figure out how to do it. We make the economics work, and there you are.
Is there any way of like testing the tenant demand for anything, or are we just, or pretty much it's just like you're throwing stuff against the wall and see what sticks, or like you said, you're customizing it. It's like a custom build almost. Someone comes in there and says, you have a plumber, you've got a landscaper, you've got a small regional trucking service, and it's like, we'll just like your tenant's just gonna, put it all together.
Experience would say that it's most tenants want the same general things. They want security is a big one, right? They want to make sure that because usually they're storing either vehicles or high value goods of some kind there. And even if they're not high value, they don't want their things, getting ripped off or broken into or whatever it may be, right? So, making sure that the yard itself is secured and functional. Size and shape of the yard. So when you have a building site, right, in order to and building sites can vary in shape and size too, of course, right? But naturally to fit a building, you want, a nice square site. Well, iOS is even more sensitive to that, in the sense that we make iOS sites work all the time that are triangular shaped or oblong or whatever it is. But again, if you're parking vehicles or laying down materials or equipment or whatever it is, if you have a nice rectangular shaped site, usually it's just more efficient. And so you can use more space with less acreage, which means you're paying less as a tenant. So that's important. I'd say the third big thing that tenants really want and what they really look for is all of them want some kind of a building. There's usually there are tenants out there that use these as pure drop storage yards. It's overflow for another operation maybe they have down the road. It's a waypoint for parking in between two other critical infrastructure points. So all they really needed is for parking. But most of the companies are kind of running a business out of here, which means they have employees, which means the employees need a roof over their head of some kind to answer the phone, be on their computer and emails, go to the bathroom. All very important. And a lot of them, to couple with having a structure for an office, what do all these guys want? They all want to shop. It's almost comical to me how often a tenant comes along and they're like, I need a shop in an office. I'm like, okay, well, that's great. What are you planning on using the shop for? I don't really know. I guess just like storage and some light maintenance. I'm like, well, do you do all your own maintenance or do you outsource it? Well, no, we all send it to like all the truck shops. I'm like, so then what do you're telling me you can't lease this property unless you have a shop, but you don't really have a good functional need or use for the shop. But everybody wants a shop in an office. So anyway, I mean, if nothing else, it's semantics, but shop, office, security, and functional site. I mean, if you have those three things, your site's going to perform substantially better than a triangle lot that's gravel only with a crummy fence and no building. That's just kind of
Right.
how it goes.
Yeah, imagine on some of those smaller lots where you're putting the building is really, really strategically important because you've got big trucks, they got a swing, all this kind of stuff, parking, all this kind of everything goes with it. You really have to plan that out and know this is the right location for it. This is the use that would be like maximize the use for it. So if a tenant leaves, you now can re-rent it to someone without, I guess, major, TI kind of stuff.
It's not necessarily overly complicated. It's very straightforward. But if you don't have experience and you don't know it and you haven't worked with any of these tenants to understand how their trucks swing or how they lay out or how they flow their business, it is very rife to see people make mistakes.
Yeah, that makes perfect sense. So, kind of as we're wrapping up here, a couple things is that what are common mistakes that you see with industrial real estate investors, and this can be any part of industrial, whether it's iOS or any other kind of part of the business. What is something you probably see commonly?
I think this is a mistake that isn't unique to industrial, but I see it in industrial all the time. And I invest in commercial real estate myself, and so that's kind of my basis here of where I'm going with this. But I see far too often where people are buying the tenant, they're buying the appreciation, and they're buying the income stream, right? And at the end of the day, in my personal opinion and my kind of investment philosophy, is you're buying the real estate. Don't buy the tenant. Don't buy the income stream. Um, Look beyond what the rate of return is on the day you buy. I think it's important, right? I mean, I want cash flow from my investments. I want them to perform. But if the cash flow or the nature of the tenant is driving the value of the real estate up above the true underlying value, the basis, right, of the real estate, I think it's a poor buy. And one of the best examples is one you kind of mentioned recently, which is like the whole Walgreens, Rite Aid, some of those deals that were trading at incredibly low cap rates. And then what's happening? The company's going bankrupt. They're leaving the building. Those buildings they're not I would argue by all measures, they're not good real estate. They're well located typically, but they were built for Walgreens. They were built for Rite Aid. And now you're going in and trying to replace that income stream in real estate that doesn't really function for anybody but those groups. And it just, and you're not going to get the rent that they're willing to pay because they were such a big behemoth of it just people fail. I've been watching it happen all over the country, and I see the same thing with industrial. It's like you might buy the Amazon building that was built for Amazon, and then Amazon leaves, and then I mean, that thing had millions of dollars of improvements built specifically for Amazon that then you as the owner need to rip out or do whatever you need to do for your next tenant. Next thing you know, you're underwater on the investment. So that's my biggest piece of advice for investors is look closer at the underlying real estate and look past the tenants, the returns, the cash flows. I mean, again, all important. I'm not discounting that, but I see it all the time.
Yeah, I can see that being much trickier with a single tenant type property. Because if you walk into like a CVS or Walgreens, let's just say they're very similar businesses. But if you walk into them, they are set up differently. They are configured differently. And the thing though is that you are buying that property with having that tenant there. That's like the big pull of you there. If it was, Charlie's Pharmacy, I mean, you probably wouldn't be paying the cap rate you're paying. You know what I mean? So the thing though is that it is, I think it's one thing, like if you have multiple tenants, like you buy an apartment complex, there's 10 units and everybody's paying $1,000 a month. You're like, okay, there's pretty good proof of concept that I can rent this for $1,000 a month. Right. But when you're going in there and the tenant is really the driving force, like you were saying, it's difficult because if they leave or, I mean, they just back out, I mean, you're not going to really go into legal battle with a Fortune 500 company. You know what I mean?
Yeah, no, you're spot on. It makes that's probably the hardest part of investing in industrial is single tenant. Because you're taking a big bet on one group, right?
So, Matt, being a salesperson for decades and getting into real estate, what are some of the main factors that have contributed to your success over the years?
Oh, good question. I think for me, and I this has worked for me specifically, but I think this applies to sales all along. Consistency and follow up is key, right? I mean, we're in the business, we're in the communication business, we're in the information business, and we're in the relationship business, right? And to maintain all of those three things, I think you have to figure out how to be organized, and you have to figure out how to be consistent, and really following up with people is key. And trust me, I work with brokers all the time and other salespeople who are not organized. So it's not necessarily a prerequisite or a must, but I think the high performers figure out a way to build a system, stick to the system, be consistent in their follow up, have a routine, right, and really just come up with the plan and then work the plan. For me, I think that's been the biggest one. If you're in sales, I don't know how you're in sales if you don't have a good work ethic, right? I mean, you just sometimes it's as simple as you have to put in the hours, and I think that for me has proven itself in concept over the course of my career, is just putting in the work. And sometimes I beat a lot of my competition based on experience and know all, but sometimes I just outwork them, right? And that flat out works too. So, but yeah, I mean, there's the biggest thing I've learned about commercial real estate and really sales in general is there's no one way to do it. I mean, it's very there's a lot of different ways you can go about it, but for me, that's probably what's been the most consistent, what's worked.
Yeah, do the work. Some of the best brokers that I've met before, they are just follow up machines, and they are on you write back a reply to them of why some property doesn't work for you, and they're there like, listen, this is that. I mean, they are there. They're not just like, okay, well, we'll get back to you the next one. They're like explaining it, and they're working through all the problems that you might have with it. And they're really dedicated to helping you make a decision if this is a property for you or not. So yeah, it's very interesting. But yes, the follow-up is key. As I've heard before from salespeople, the eighth sale, right? The eighth follow-up is usually where you make the sale. And obviously real estate's a little different, but it's a lot of follow-up that most people wouldn't go through.
It's with that in mind. I mean, it's cool. The business that I work in, I'm a one man shop. Kidder Mathews, my company, is very large, but like I run my own independent brokerage business, and I'm 100% commission. I'm a 1099 employee, so I don't have working hours. I could show up whenever I want. I could take as many days off as I want. I could do whatever I want, right? So everyone's like, unlimited freedom. You must get so much free time and time off. And I'm like, yeah, I go on vacations with my family. But if I'm being honest, I am literally working 365 days a year, 24 hours a day. Because if I want to win the next deal, impress my client, give them the service that they expect out of me, they're expecting quick responses, immediate follow-ups, detailed information. And whether I'm, on a beach in Hawaii or here at my office in Tacoma, like, they're expecting that information. So it's figuring out how to bridge that gap, but I wouldn't trade it for the world. It's a great world to live in.
Matt, how can our listeners learn more about you and your business?
I would say, by all means, I'm very accessible via phone, email, text. I mean, all my information is very public and available online. So by any means, if I can be a resource for you, have a great conversation. I mean, that's part of what I love about what I do, is getting to meet people like you and people out there in the world, because we have so many mutual connections in that regard. But the other thing is I do utilize social media quite a bit. LinkedIn is probably my primary platform. So, and I go out of my way to try to interact, and I post a lot of content that is more tailored towards being educational about commercial real estate and industrial real estate, especially kind of giving tips and tricks on investing and how to navigate commercial real estate. Because as you know, it's if you're not in commercial real estate, it's actually very kind of mystical for a lot of people. They don't really know it or understand it. So I kind of try to demystify it a little bit. So yeah, reach out to me, follow me on LinkedIn. Those are probably your two best bets.
Awesome. We'll put those links into the show notes. And Matt, I want to thank you so much for coming on the show today.
Thank you for having me. No, this is a sincere pleasure. So I appreciate the opportunity.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.